Crop Life Retail Week, sponsored by Valent. Well, welcome to another edition. This is Paul Schrimpf, here again with Eric Sfiligoj, both in the house. I was out a little bit. I go away for a couple of days and all kinds of stuff happens, as is per usual. I went to SST in Stillwater to actually talk to Matt Waits, who's kind of running the show there, and get a sense for where they're going in the future. They're feeling real good. It was great to see Dave Waits, who's the patriarch of the company. I hadn't seen him in a number of years. He popped in and said hello. So it was an interesting, fun trip. I tell you, I'd say the people of Tulsa and Stillwater were probably about as friendly human beings as I've been at in travel. Like, everybody said hello and thank you, and I was really impressed. So 2 thumbs up for Oklahoma. Of course, while I was gone, we had a number of mergers happening, or at least 2 big ones.
Yeah, thanks, Paul. As we've been speculating here for the last couple of weeks, Bayer and Monsanto continued their dance and negotiations, and on September 14th, it actually was announced the companies have decided to merge. Bayer will be acquiring Monsanto for $66 billion. Which will create a seed crop protection giant in the world with about $26 billion in total revenue, which is compared to the Dow-DuPont deal, which was announced earlier this year. It looks like their revenue will be around $15 billion. So it'll be a very large company that comes out of this, maintaining headquarters in St. Louis and Mannheim, Germany. Crop protection in Germany, and seed and traits here in the U.S. I know there is some speculation that the deal will have trouble getting through regulations in various parts of the world. I know the CEOs, Werner Baumann and Hugh Grant at Monsanto and Bayer, have expressed that they think it will not come to regulatory stepping in the way, regulators stepping in the way, and keeping this deal from happening. But Paul, will have to see, because the interesting thing is the share price that Bayer is paying for Monsanto comes out to about $128 per share, and as of this morning I checked, you could get Monsanto stock on the open market for about $104 per share, which means if you invested about $10,000 in 100 shares of Monsanto, you would make $2,000 easy by just hanging on to the share until the deal was finalized. So that shows that on Wall Street, at least, there's some doubt that the deal will actually end up going through.
Interesting. Well, it seems like the 2 parties are pretty well made for each other in terms of getting together. There's definitely going to be some things that need to be dealt with. Obviously, the cottonseed is going to be one of the most significant, but I'm sure there'll be other things. But this is one of those I think is just destined to happen, and we'll move forward. Who knows?
Well, it's interesting you mentioned cotton, and you're wearing a cotton shirt, of course. But I know that when Monsanto acquired Delta Pineland back in the mid-2000s, they had to divest the Stoneville brand of cotton to make that deal go down, and the buyer, coincidentally enough, was Bayer. So, if I had to guess, Stoneville may be on the market again here in the very near future.
Entirely possible. Of course, we don't really have anything new from the John Deere climate front, but I know that challenge is going to be happening. So, and we were pretty sure that was going to happen as well. So who knows? It's always interesting in the world of mergers. And more merger talk after this word.
One of the big things that we were looking for was better fungicide, soil-borne disease control. Intego Sweet offered excellent control of Pythium, Phytophthora. Fusarium and Rhizoctonia is the main reason that we went with the product.
The reason we used it was the previous years that we had really good results, so we decided that it was got good stand and good emergence, and it ended up with a really good yield. So we decided to put all our acres to Intego Sweet.
And of course, the other one is the surprise, somewhat of a surprise that came out from the fertilizer market, and I think you got some updates on that, Eric.
Thanks, Paul. On Monday of this week, which put it September 12th, Potash Corporation and Agrium formally announced that they were planning to merge. I know we've been speculating on this, and with all the talk about Bayer Monsanto, this was one of those mergers, Paul, that was kind of flying under the radar for the most part, but It will be going down. They expect it to close by the end of 2017. The combined company will have revenue in about the $21 billion mark and make up about 60% of various crop nutrients for the North American marketplace when it's brought together. And both of the CEOs for the respective companies expect that there won't be antitrust issues since it's a Canadian company buying a Canadian company, and the company will continue to be headquartered in Saskatoon, which is where Potash is, but maintain a big presence in Calgary, which is where Agrium is currently based.
Yeah, and some of the initial talk I had with retailers and some experts on the retail side domestically didn't think this was going to be, this wouldn't be a bad thing. This might actually be a very good thing for retailers at the end of the day to have these two companies coming together, and probably wouldn't see an appreciable problem in terms of supply or prices or anything like that. So
no, it's the only thing that's interesting is if you look at $21 billion of total revenue for the combined companies, that if I'm doing my math right, Mosaic, which would be right behind them, is in around the $9.5–10 billion range. So I mean, double the size. So interesting.
Mm-hmm. Yeah, very much so. Lots of things to be watching in the next couple of weeks, couple of months throughout the busy season. We'll be with you on another edition of Crop Life Retail Week next week. Thanks for joining us.